Hey, what's up, YouTube? You're tuning in to howtoplaystock.com. My name is Kepley. Today's video, I'm just gonna talk about a couple things in regards to the stock market, okay? There's a lot of people out there right now, people that I know personally and people that have been emailing me a little bit, asking me, why I'm emphasizing so much on being careful with what kind of stocks you invest in, if you are going to invest in stocks. And if you're somebody who doesn't like a whole lot of risk, I've been recommending lately that you just stay out of the markets. Okay, now the reason why I'm saying this is because right now with the market environment, it's really high risk. Okay, there's a lot of market manipulation with central banks, Deutsche Bank, JP Morgan, and a few of the others like Goldman Sachs. 6 months ago, they were caught manipulating the metals market. Okay, you've got that. You've got geopolitical tensions between China, ourselves, with trade, since Donald Trump got in office. You also have triggers or trigger points that could cause serious financial repercussions, globally, with again, like Deutsche Bank. If Deutsche Bank were to go under, look out, because you're going to have a 2008 moment. Actually, it'd be much worse than that. Another one is the bond market. Okay, we've got a massive sell-off in bonds over the past, I would say 6 months to a year. You have, foreign countries dumping U.S. treasuries. So that's another thing that, because with bonds, guys, if the bonds go down in value and the yield goes down on those, when that happens, the stock market, it understands that, and it starts correcting itself. Okay, now the bond market has recovered a little bit and has stabilized on the yield curve, but it's still something that we've been seeing with bonds, the prices of bonds and the yield curve over the past year and a half. So is it volatile? Bonds are not really supposed to be volatile, but they're becoming that way, and that's why it's just another trigger point or something that you need to pay attention to if you're in the stock market. I've been shooting a lot of videos lately on paper assets, and why paper assets are that they're just that, paper. They're backed by nothing, and they're not real. And I've been saying that for a while now, because it's tied to a digital currency. Okay, so you got to keep that in mind. And just one other piece that I want to talk about real quick, because I haven't really covered it a whole lot in some of my videos, and that's tech stocks. The reason why I'm bringing this up is because I've got a friend who was thinking about investing in a tech stock with Snapchat. Okay, he's like, man, it's there's a lot of momentum behind it, a lot of big money going into it. Here's the thing with tech stocks, guys. Tech stocks are one of the most volatile assets you can get into in the stock market. Okay, and if you don't believe me, all you have to do is go back and look at the tech stock bubble from the 90s and what happened there with the .com. Tech stocks, especially with ones like Snapchat, I looked at the valuation of it before it became an IPO. It was way overvalued. And the other thing is, with Facebook, Twitter, Snapchat, a lot of these really don't produce anything. Okay, now they might have a little bit of service-oriented products, that are in their business model, but it's service-based. It's not producing anything. It's not manufacturing anything. It's not like it's not tangible. It's not like real estate where you can touch it, you can feel it. Okay. So tech stocks I tend to stay away from because, yeah, can they make you a lot of money? Sure. But there's a lot of things that can make you a lot of money. And as an investor, I've learned over the years the best way to reduce your risk, okay, in the stock market so you're not losing your money is to get into companies that produce stuff. For example, I'm not going to use oil, but let's just take a utility company. Okay, a utility company, it produces energy, so you can have electricity in your house. All right, now that produces something, and it's not necessarily what I would call a tangible asset. I mean, it is because it's a company. They've got an actual physical location and facility where they work their magic with power and electricity. So it's tangible in that regards, but it also produces something that is essential to our survival. Okay, so that's a great example of a stock in a specific industry where, and with utilities, those are actually known historically to be pretty good for you as far as reducing your risk and weathering some of the economic storms that occur throughout time, when it comes to financial crisis and stuff and inflation. Because with inflation, prices go up. And if you're in a utility company with inflation going up, normally what will happen is the prices of electricity will go up as well. So those are just some of the things as an investor that you want to look at if you're planning on playing the stock market. Because right now, other than getting into hard assets and maybe some stocks that actually produce something, I just wouldn't invest. Everything's too overvalued. You could go into an index strategy approach, which I talk about on my YouTube channel. But the thing is, with indexes across the board right now and almost everything's in a bubble. And the last thing you want to do is invest. You don't want to invest in anything if it's overvalued. Because ultimately, what it comes down to, if you're investing in the stock market, is the price that you pay. You have to look at the price that you pay and ask yourself, would I pay this amount, or do I think that this company is worth what they're charging for the share price? So those are my thoughts on the stock market right now, and where we're at, and some of the things that you can you can keep in mind if you're planning on investing, or you have money in the stock market right now. If you have money in the stock market, don't be afraid to take some of that money off the table, especially if you're in a profit. Okay, and even if you're not in a profit, you'll hear sometimes the wealthy. You'll hear in the news, like for instance, Warren Buffett. He's not afraid to take a loss, so he'll sell some of his assets and get out of paper assets and move his money around. And you'll hear sometimes where, like either him or I think Jeff Bezos lost $1 billion in a day, or he made $1 billion in a day. You'll hear things like that. And some of these guys will take tremendous losses. But if you ask them, how do you feel about that? Listen to what they say, because it's really interesting. Most all of them will say something similar. And it's, hey, it's just paper assets. It's just a paper currency backed by nothing. So, I was okay taking the loss because if I stayed in, I was going to lose more. And they can take minimal losses that way. move their paper assets into something else that actually produces something. So don't be afraid, if you're invested in the stock market right now, to take some of that money off the table, either in a profit or minimal loss. Okay? That's all I have for today's video. You're tuning in to howtoplaystock.com. If you like this information, go ahead and share and like it with others. And if you haven't subscribed to the YouTube channel, go ahead and subscribe as well, because I cover broad topics across the board with investing and certain, different things, and I break down stuff for you so that you can understand it, because the stock market is very complex and complicated to understand sometimes, and a lot of it just comes with experience and research. Okay, so go ahead and subscribe to the channel. Other than that, I hope you guys are having a good day, and remember, income's the outcome. I'll talk to you later.